Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, August 20th. Hey, we got a couple economic news releases, so we'll start off with the weekly jobless claims. So last week we had 274,000 people apply for unemployment. It was supposed to taper down slightly and went up slightly instead. So instead of getting the 271,000 that we expected, it went up to 277,000 people applying for unemployment. Philly Fed was a nice one, especially after that disappointing New York manufacturing number. So the Philly Fed is basically manufacturing in the Philadelphia region. So the previous reporting we had back in July was 5.7. It was supposed to go up to about 6.0 and went up to 8.3. If you recall, the New York one was actually a pretty big negative number. So nice to see that all manufacturing is not in the toilet, so to speak. Existing home sales, also a nice pleasant surprise. We were up at 5.48 million, and the forecast is supposed to continue at 5.48 million, and it jumped up to 5.59 million. So a nice indication as to homes are still selling. On the other hand, we got the leading indicators, a little disappointing. So back in June we had a 0.6% jump, but this time around it pulled back 0.2% negative. So a lot of that is attributed to the building permit, so the forecast of economy. But overall, they're still saying it's looks like that we should be on pace for a moderate growth here in the U.S. here. So speaking of that, the stock market's down. It's down Dow's down well over 200 so far this morning, and a lot of it is, if you recall, yesterday we had the FOMC minutes released yesterday. So there's still a little dissension, or at least difference of opinion. It's still basically, but the conclusion came in that it's still on the table for a September hike. Now, some investors are kind of forecasting that maybe it may not be September, maybe it'll become more like a December if they decide to pull the trigger. And if they do, it'll probably be like maybe an 1/8 of a percent, just to say they put it in there so that way we're not like basically at 0% funds, right? At least have something in there. On the other news, it's been a kind of low down key, but we're basically at the low for oil for a long time. So earlier in this year, we were like around 42. Now we're down to about 41 and change for a barrel. So love to see gas prices come downwards, but right now I don't know about you guys, I haven't seen it come down so much. Sounds like a lot of it is due to more domestic issues on the refineries. Sounds like there's been some issues like out of Indiana and stuff. That's kind of keeping the prices up a little bit. So anyways, let's take a look here at the bond market, and we got the red down, but if you see, we actually started the day up higher. We're currently about 3 basis points higher than where we left off yesterday. So a lot of people are actually giving better pricing today, primarily because we had that nice little spike upwards, especially after the Fed minutes went out, got released, and the stock market started tanking a bit, and the bond market started going. So right now we're currently above the 100-day moving average, which is a good sign for us. As you can see, we're still in between the 100-day and the 200-day moving average. So it's going to be a tight squeeze here. Hopefully we can get ourselves in a position to be able to jump up higher. But right now it's we're kind of at the highest where we've seen. Be very cautious as we're in this realm here, because as you see, the last couple times we were in this realm, we did get bounced lower again. So, but if we can break above the 200-day moving average, we might see a nice little rally. But again, I would urge very much to be very cautious in this range, maybe even locking if you have any loans you're floating or not. Okay. All right, folks, you guys have a wonderful day. Thanks so much for watching. But today we did get an improvement right in pricing, even though you see the red candlestick for today. But that's probably because it started off much higher and it's down for the day. But compared to yesterday, we're up where we are. So therefore, we get better pricing today. All right, have a wonderful day. Thanks so much for watching. And again, we'll see you guys tomorrow. Bye-bye.